Hey there, Alex Bolden here, editor of Insider Stakeout, and I'm here to answer your 5 questions. Let's go. All right, question number 1. What's the difference between legal and illegal insider trading? This is probably one of the questions I get asked the most, and one of the most important that you need to know. Illegal insider trading refers to buying or selling securities based off of material, non-public information. So if you know something that's going to happen to your company, and you tell a friend or family and they purchase stock, you purchase stock based on that, you can get in serious trouble. I'm talking jail time and reputational damage. But there is another side to this, which is completely legal. All you have to do if you run a company is you file a Form 4 with the SEC, and you can buy and sell shares as much as you like. So once you file a Form 4 with the SEC, that information is public and searchable online through the SEC's website. And a lot of people will sometimes use this information to trade off of. After all, if you're running a company, why would you buy shares if you don't think the price is going to go up? Okay, question number 2. Who's considered an insider when we're referring to insider trading? So insiders refer to the C-suite executives at a company. These are the CEOs, the CFOs, the COOs, anyone with a C in their title, they're an insider. Insiders can also refer to 10% owners or directors at companies, and insider can also refer to anyone with inside information, and that could be members of Congress or other members of the government. All right, question 3. How do you use insider trading to your advantage when playing the stock market? So you can use insider trading as a strategy or an indicator to help you understand what direction you think a company is going to move. So the basic strategy is to look at the Form 4s filed by the company insiders and see how much they paid, on what date, and how many shares they purchased. That can give you a good indicator of what they think the company is worth. And you can also look at congressional buying, what members of Congress are buying the stock. You can look at lobbying information, and you can also look at institutional buying as well. All right, question number 4. Do you think the PELOSI Act will be passed, and how will it affect markets moving forward? All right, so the so-called PELOSI Act would restrict members of Congress and their family members from purchasing and trading and holding certain securities. So for the most part, this is a bipartisan act, and most members of Congress and citizens of the US want something like this to be passed, because you don't want members of Congress voting on laws that will affect their stock positions. Now, it's very unlikely that something like this will pass. Now, if this was passed, I don't think that it would have a substantial effect on the markets as a whole. You might see less volume within single stocks, but overall, it's not going to affect the broad indexes. All right, question number 5. What will happen if lawmakers ban TikTok? All right, so this is an interesting angle for investments right now because there are a lot of companies vying for the top spot within social media. You have Twitter, you have Meta, and then you have up-and-comers like Rumble, and even startups like Vinco Ventures. And if TikTok were to be banned, I think you would see a lot more investment flowing into those companies, and a lot of people are betting on companies like Rumble and Vinco Ventures to take over. If TikTok gets banned, we'll likely see a pop in these stocks, and that's because something else will inevitably take TikTok's place, unless it's just a fad. So that's it for 5 and 5. Thanks for being with me, and have a great rest of your week.